and welcome Michael, our today's chair of this panel, and fellow panelists to the stage. Thank you.
When I introduced the novelty of the caramel wafer incentive and punishment system earlier on, I hadn't actually remembered I was chairing one of the panels this afternoon. So I may be punished by my own stupidity here. Welcome back. Hope the conversations have continued to be inspiring. It's really hard not to be when you hear the quality of what we just heard about space and everything else, and try to keep avoiding the cliches that go with talking about that, but really inspirational and so exciting to see where Scotland fits with that, as I said before. We're pivoting back to more day-to-day, dare I say, earthly matters now, as we look at the relationship between scale-up businesses and their investors. We have three very different businesses with us this afternoon who've been on different journeys, and hopefully through that we will learn a lot and we'll be able to consider what all is at stake. Now, this is the bit where I say, is there a microphone for me to use as I sit down? Oh, blindness, not a great one. Right, so I will now sit down, and I have here to my right Gordon Stark, who is the CEO of Murgitroyd, the largest pan-European patent and trademark attorney firm. Then beside him, Thomson, who is the co-founder and COO of Drug Delivery International Limited for a while before becoming CEO of BDD Pharma. And then at the end of the panel, we have Craig Johnston from Enough, who are a food tech business looking to tackle the combined issues of feeding the growing global population and take issue with the unsustainable impact of traditional protein farming. So I think you'd agree there's a diversity of businesses here, and as we're about to discover, a diversity of funding pathways. Perhaps, I'm not sure which order I said I would do this in earlier on, but I'm going to pick on you, Craig. What's your story in a nutshell?
Thanks very much for the introduction. So 10 years ago, I was playing about in the laboratories at Strathclyde University, fermenting mushrooms, or mycelium. And then that grew to the company that's now Enough. We were originally called 3F Bio, Food, Fuel and Feed, or Friends, Families and Fools in terms of investment perspective. And we rebranded to Enough a couple of years ago because it was more confusing in terms of our product being being food. So the funding actually started with some academic funding, so EPSRC funding to do some impact acceleration, and we filed a patent in 2014 and established the company as a spin-out from Strathclyde in 2015. We went through probably a fairly traditional route, so we had initial seed investment coordinated by EOS with support from Scottish Investment Bank, and also the University of Strathclyde, and a couple of high net worths. And then we really got our breakthrough in terms of Series A, where we raised 6 million, primarily through a mission-driven investor. So in our segment of alternative protein, mission-driven investors, and there's quite a large number of these, and that's, I guess, one very interesting aspect. We also had some follow-on funding at that point. We grew, and then we secured 40 million Series B, so that was coordinated by Nutreco. The main investor in the previous round was CPT Capital, so they followed on. We also had significant other investment from HAL, based in Holland, from Osafin, which is the kind of family office of Onassis family, and also AXA. And then earlier this year, we completed a Series B+, which again was 40 million, with follow-on investment from some of the organizations I've mentioned, and also this one was led by World Fund. So quite a journey in terms of fundraising. That money's gone into R&D, but mainly it's gone into manufacturing assets. We have a large-scale facility in the south of the Netherlands, I'm also sadly a bit of a grant geek, and during that process we've raised about 20 million non-dilutive grant funding, so I can talk about that maybe later.
Thank you. Right, Carol, turning to you, any similarities or a very different pathway?
I think we've had quite a different pathway. So just, I guess, a little bit about BDD. We're an integrated drug delivery and clinical trials company. So my teams take drug powder, formulate that into a medical product, as you know today, and then we put that into man to do the clinical testing. We're geared up to really accelerate the development of new products, to do it at small scale, and have from idea to clinical data in less than a year. So it allows you to kind of almost fail early. My business development guys say, don't say fail, but if you can very quickly get to an answer whether it's going to work or not, it's better to do it within a year than it is to do it within 5 years. So our journeys, very different journey from Craig, and apart from the fact that we both started out at Strathclyde University. We have had angel investment. We've just closed a £2 million funding round with Archangels. So quite a different path, possibly a bit more streamlined, simple at this stage.
Okay, we're going to come back to a few of the themes that you've both raised. But Gordon, to complete the scene, this might be a slightly simplistic way of putting it, but normally you'd be on panels, I'm sure, advising audiences like this about patents and all that sort of stuff. It's a different kind of, here you are the subject matter for the journey in getting funding. So no doubt you'll make a plug as you go, but tell us how, MBM commercial might have a word to say about that, of course, but what's your journey been on? It's been a little bit different.
Indeed. Thank you, Michael, and great to be here today. So Murgitroyd, for those of you that don't know us, we're a company that helps people protect their innovation, largely through registered intellectual property rights, primarily patents and trademarks. And our growth journey starts back really in Glasgow, almost 50 years ago, and really having broke through the kind of scale-up phase, what's enabled our growth has been external investment. Two pivotal points in that journey, really. Back in 2001, we listed on the AIM market of the London Stock Exchange, and then in December 2019, we delisted, and are now owned by a London-based private equity firm called Sovereign Capital. So we're now approaching maybe about 4 years into that journey, and as we've heard on some of the panels earlier today, there's typically a hold period around that investment phase. So, we're probably coming closer to the end of that and starting to think about what succession in terms of investment looks like. The investment we've had has been very fruitful for us, and today our turnover is just over £100 million, 500 people, and our operation extends not just in the UK, but across Europe, out to Dalian in China, and over to North America and Central America.
Just sticking with you then as we move into the next phase of the discussion. You have obviously been through the scale-up journey a wee while ago. You listed on AIM, you come off that, you then get private equity ownership. I mean, I don't know, how much of earlier bits of this are still salient, but how different is the ownership model, and in terms of allowing you to develop the business as you see fit?
Mm-hmm. Yeah, good question. So we've probably gone through different cycles of ownership, and really that would center around concentration of ownership. So back when the company was first founded, we had 3 founders who scaled the business up. Of course, as you go on to AIM, that becomes somewhat diluted. The move on to AIM at that stage was to enable the founders to realize some of the value in the business, but also brought investment in. And through our AIM journey, I think we found a very settled shareholder base, and we had a fairly stable and consistent investment proposition, largely focused around progressive dividend and what might be classified as steady Eddie growth. And as we moved through some of our growth cycles, we invested heavily in growth in America. About 60% of our revenue now comes from the United States market. It was a very fruitful growth journey for us. But as we started to look to how we could continue to scale the business, we looked at opportunities to consolidate in quite a fragmented market. that took us back to looking at different investor support and private equity, and really now in our private equity status, we've really brought that investor focus back of course, to one central investor. So through the journey, the investor interests changed, and the proposition behind it changes as well. And I think as long as you can align the investor with the growth journey and proposition, then you can find the right investor for the right cycle of growth.
So if we return to you, Carol, your experience thus far, two different businesses, but you were just talking about the Archangel support. What's it been like to go through on the Angel journey, and how time-consuming is the fundraising vis-a-vis actually running and growing the business?
So I guess when we started out on our funding round, we were quite unusual in that we were already trading, we were already profitable. We went to get funding to really accelerate what we're doing and just to sort of start to scale the business. So we talked to a number of individuals, as you can imagine. We talked to VCs, we talked to angel investors, governmental investors, high net worth individuals. And we were in a really fortunate position because we were already up and running and profitable that we could take our pick really from all of our investors. And we went with an angel group, we went with Archangels for a number of reasons. I think a very fair company to work with. Some of the other offers that we were made were quite exploitative, to be fair. They're also, but it was easy. Everything that we've done with Archangels has been very, very easy, very, very supportive company. Of course, you've got to go through the due diligence. Of course, that's a bit of a headache. But follow-on funding has been a lot faster because the Archangels team obviously know us now. And we've got a good backing with the investors. So it's been really, really very straightforward, a great company to work with, and just very, very supportive.
The bit where I wasn't paying enough attention is how on earth you arrived fully formed and profit-making.
So we started out as a clinical trials company originally, with just a little bit of grant funding, and that business was very much a lifestyle business. It was washing its face, just with sort of connections from the academics. And then about 13 years ago, I came on board with a new technology. So I guess we're quite an interesting business model in that we have our service arm for our company, which is where we were profitable, which is running the clinical trials, developing the formulations for different companies. So that kind of puts the lights on, pays the bills, pays the salaries. When I came on board with Drug Delivery International as a sister company, we brought with us technology from Strathclyde University for a modified release tablet. So a tablet that you can take now and it delivers the drug at another time. So that's our licensing milestones, royalty generating part of the business. So we're running as you know, with two different business models at the moment, if you like, almost, with long-term, like high value growth from the licensing when our products get to market, but also sustained along this piece for the service revenues. So that's how we were profitable from the start.
Okay, let's. You mentioned in there a bit of grant funding, and Craig teased us with his earlier answer, saying he was a bit of a geek when it came to grant funding, and it's a room full of geeks, so we're all in this. We want to know more. What made you so focused on that, and is it still relevant to the business as it grows?
Yeah, so very good point. So I had an industry career at Grangemouth, and actually got involved laterally on some R&D work with Scottish Enterprise, which was really valuable for the company. But I really accelerated my geekness when I joined Strathclyde University, working there in the Technology and Innovation Centre, and really with some expert academics in terms of grant funding. So one of the academics there, Alistair Florence, I worked with, has raised £100 million himself as PI over the last 10 years in pharmaceutical manufacturing. So in terms, and actually I've submitted a grant when I was in the university with, with Carol, on Innovate UK. So once you can kind of navigate the landscape, which can be quite, quite tricky, then, and if you've got a good, proposition, then that can help. I think for when you're starting the company, we started with an SE Smart Awards. We had a Innovate UK Award, Zero Waste Scotland. So these were kind of small grants, but when you don't have much money and you don't want to be diluted, these are absolutely, absolutely critical. But probably the kind of breakthrough moment for the company came when we secured a 17 million euro grant for a flagship. So this is quite an unusual grant. So it's a first of its kind biorefinery. And the reality is we weren't going to apply because we were too early, but it was such a perfect fit for what we were doing. We decided to go for it, highly competitive, but we had a great consortium and, we're successful. I think our situation's changed now, so we do still look at the, the grant landscape, but are much more selective. You've got to really have tie into your company strategy, rather than just chasing, grant funding. So I think but that approach really changes as you grow, and as well as the scale up of the company, we've also scaled up our fermentation processes. So physically, we've gone from very small lab scale up to 200,000 litre scale. So there's a kind of scale up, journey that we've also been on.
Now, you mentioned also that you have a manufacturing facility in the Netherlands. You haven't said this in the panel, but we were discussing before the fact that you've got kind of Scottish public money invested through one of the institutions. We had a couple of them on a panel earlier on today. How conditional is the funding you get from there? When you get that equity funding as opposed to grant funding, are they keen to know that you're spending the money in Scotland? And how do they react to the fact, say, yes, we're going to develop in Scotland, but by the way, we've got this big plant across in the Netherlands?
So the reason that we don't have a facility in Scotland is very simple. Our process creates no waste, but we have to tie into an ethanol biorefinery, and there are none in Scotland. And we did have some quite interesting discussions with Diageo, but the prospect of our waste perhaps going into the national product was not something that, although technically would have worked, something that we would want to entertain. So it's always been our strategy to have our headquarters and tech centre, here in Scotland, in Glasgow, but to grow, internationally. So some of the, the grants have specific, clauses, within them, but the organisations have been investing into a Scottish company, but clearly with a, with a reach globally. So we're also looking at future, investment in North America, in Asia, in addition to our European footprint. But there is this technical issue of having to be linked to another type of facility. We do have a pilot plant and new product development facility in Kinning Park.
So in the industry that I represent, the venture capital and private equity world, it is very much focused on the fact it's an active ownership model. I'll come to you first of all, Gordon, because it's the most obvious place to start. But to the extent that it's relevant for other types of backing, I'd be interested to hear. How active is active? So it's not simply, they don't just write the check and walk away. How additive is it, or is it simply an accountability mechanism that they're always at your board meetings?
Yeah, thank you. So I think it can change depending on the stage that the company is at and the growth journey. So certainly with our financial backer, and they would describe themselves as a backer, Sovereign Capital, they would firstly buy into the business, and at that stage they're really trying to understand the business, help work out what the growth acceleration is, and we talk a lot about value creation plan and thinking about what that could be and how the investment that they would bring can help accelerate that. And of course, through that growth journey, thinking about how we manage the risk profile around the investments we make, whether it's M&A, whether it's bringing in senior people to the management team, etc. as well. So there's an ongoing dialogue there. We would see our investment principals at a monthly board meeting, and they would have a fairly good understanding of what's happening in the business. From my own position as CEO, I kind of adopt the same principle and ethos as I would expect from my senior team, which is no surprises. So if there's something good or bad or otherwise, then I think heading that off can be helpful. And it builds trust. And I think, if we think back through our journey with investors, then it kind of comes to the relationship that you form with them, the trust, and sometimes if you want to push on with an acquisition, etc., then the trust and the track record does come into play as well. So I think with some of our investors, they do stress to us that they've not run businesses, they just own them, but they can bring a broad experience. And certainly in times like this, when you're looking at broader geopolitical, macroeconomic uncertainty, for me, I would say it's a value to have that broader investment view being brought into the boardroom to keep us on a good track.
Carol, how relevant is that to you? How actively engaged are the backers beyond you telling them how you're performing?
So I think it's very interesting. Obviously, we are reporting back to our investors, not just the angel group, but the wider group of investors all the time. I think there's an ecosystem, so that they're active in different ways, I think. So the angel ecosystem, we get together with the other companies in that environment, and we learn from each other. So there's specific events, over and above just the standard reporting of finances, et cetera, you obliged to do. They pull together all of the different companies to learn from each other in a safe environment where you can say, what have you done here? How did we do that? All the questions that you think you can't normally ask when you're trying to grow a business. And there's just that environment there. And then just ongoing support. So I know I can pick up the phone at any time and say, do you know somebody that can help me with this? And vice versa. The phone will ring and it's like, actually, I've just tripped across this, which might be very, very useful. So very, very hands-on, active, but not cripplingly active. Not interfering, is what I should say.
The Goldilocks
exactly
position. Good. Craig, you've obviously gone through quite a decent number of the different stages, Series B plus. How different is it at each of those stages in terms of the input and expectations of the investors? How active do they become, or does it not change?
Yeah, I think it's a very good point, and there has been an ebb and flow in terms of full director status and observation rights. But I think that's kind of natural as you grow. I think of the 4 rounds that we've had, 2 I would say, well, probably 3 were relatively straightforward. One was much more difficult. So I think the early kind of seed funding, we spoke to a range of the kind of Scottish players, all very supportive, and a very kind of good ecosystem there. Our mission-led investor was so committed to the amount of activity, due diligence was perhaps less than you might see elsewhere. He knew the company, he knew the sector. Our most difficult one was our first, Series B, where we spoke to maybe 60 companies. And at that point, cultured meat, which is in the same, broadly in the same sector, was attracting a lot of money. And although we had an established product and customers and a route to market, in some areas we were seen as just not being sexy enough in terms of the product. So that was a very, took about a year. We did it ourselves rather than with an investment bank. There's perhaps some learning there. Whereas the one that we've just concluded this year was we spoke to a few companies, got a lead investor, and was concluded very quickly. Also, we've had some dynamics about who would lead over the different rounds. So I think sometimes it's your proposition, sometimes it's the market dynamics at that particular time. Also, there's a kind of check size. So sometimes you could maybe, inadvertently fall not asking for enough, which is maybe a little Scottish, trait. So there's that, aspect. So it's been kind of mixed.
Now that that's settled, until you need to go and get the next round, how engaged are the investors day-to-day? I mean, the exam question here is the partnership that you form with your funders and investors. How well does that work?
So it works very well. If you just look at the amount of follow-on funding, that we've had, as well as having new investors, so that works well. We built a large capital facility, so there were some challenges in terms of timing, resources. Our raw material costs have gone up significantly. Our electricity costs have gone up significantly. Fortunately, the market price has also gone up, so our margins remained fairly stable. But these were challenges, yeah. And also we've had to commission and bring on a new manufacturing facility, which again has challenges. So I think the acceptance of some of the some of the risks, some of the challenges, that's been they've been very, very loyal in terms of their their support. And we also have this interesting dynamic where some of them are heavily invested in the sector, and some are more generalist, and this might be their first exposure to the food sector. So that also creates an interesting dynamic. We've also had an interesting dynamic about should or shouldn't we accept corporate VC funding, because that has certain implications, particularly when you project forward to potential exit. So it's been a very there's been some robust debates at at board meetings, but it's overall been very, very supportive.
Gordon, earlier on you talked about the importance of no surprises. A rather nasty surprise that we all got collectively was the pandemic. If ever there was a moment to test the partnership between investors and the businesses they're backing, and particularly the management team they're backing, that was it. And one can argue as to how far beyond its impact we have actually reached. Do you mind giving us a thumbnail of how that experience was dealt with by you and your investors, and how it's changed things potentially since?
Yep, sure, thank you. So if you track back in our timeline, we were acquired in December 2019. So 4 months in, along comes the pandemic, and all the ambitions and the enthusiasm was, of course, quickly tested around how could we move forward here. For me at that stage, I think it was a huge test of our partnership, in fact, because we'd said we want to get through this. So we have 3 corporate values in the business: trust, unity, and confidence. And the value of unity we thought was key to whatever lay ahead, getting us through it. So we said to them, look, we don't want to furlough staff. We want to give assurances around job security and move through. And we, in fact, adjusted some of all of the forecasts that would underpin their investment in our business, of course, had to be adjusted for year 1 while we managed the uncertainty that the pandemic would bring. So I think that really kicked us off in a good footing, because we quickly built nothing like a potential crisis to bring people together, and I think it set us off in a good track. And that understanding, I think, meant a lot. Colleagues across the business trying to understand what this new investor would bring or demand of the business too. I think it actually in some ways acted as a positive, because it kind of galvanized us together, and any perceptions around private equity investment were quickly dispelled in terms of the job protection, the continued commitment to invest, and trying to find a way to grow. And certainly, unfortunately, in our sector, the pandemic actually produced some opportunities which we could benefit from.
And has it, that kind of relationship that was pretty well established in crisis times, not for the business per se any different to anybody else's, does it mean that now things feel different to what you might have expected 4 years ago? Do you work differently to the way you anticipated?
Yes, I think so. And I mean, pandemic's changed a lot for us, not least expectations around how, where we work as well. I think from an investment proposition also, things have changed, and in fact we've moved through, we made 2 acquisitions during COVID when restrictions were still in place, so we were trying to integrate businesses in effectively a virtual sense as well. So we've faced and overcome different challenges together. I think that's made the relationship stronger. And from my perspective, whether it's been our current private equity investment or historically when we were listed, delivering on the growth expectation and building the trust around the ability to do that, I think is key when you're managing investors.
Carol, as a well-established person in pharma and the broader science, the pandemic obviously gave us an insight into what happens in the industry, and literally the way in which the vaccine was delivered from the continent to GP surgeries around the UK became a story. And Kate Bingham of SV Health Investors, who was the chair of the task force, has written a great book on some of that stuff. And pizza boxes and vaccines, if you don't know the connection, read the book. But from your perspective, maybe give us a thought on how you watched it unfold and thought the role of the industry more generally in addressing it. But to the point I've just asked Gordon, how did it change the way you were running your business and relating to your investors?
So rather unusually, being in the pharma sector, you'd think it would be a booming time for us, but actually we were completely closed down for our clinical trials for over 9 months because we do healthy volunteer clinical studies, and so all NHS resource, all hospitals, etc., were just closed off to us. We weren't actually able to trade at all. We did try and move into research with other companies to try and keep things moving, but it actually was quite detrimental to us as a company. We had just finished a funding round, which was, a blessing really at that point to help keep us moving. So we didn't, what we do, we can't do from home. We have to be in the offices. Our offices are in the middle of the COVID-19 transfer corridor, so that was pretty tricky. But throughout the whole piece, our investors were hugely supportive. I think where we've won out from, because I think everybody has in some way got a wee boost from COVID. Where we've won out is that the market boomed straight afterwards, the healthcare pharmaceutical market, because I think everyone thought, well, it's safe actually. Even in we're at the end of a pandemic, people still need healthcare. So it felt like a safe area for investors to be. So there was a lot of innovation happening, a lot of investment in that area. So there definitely was a sort of pharmaceutical boom. But at the time, it was awful. One of those nice moments where you can actually ask one of the other investor companies, what are you doing?
I don't want to ask for commercial secrets or anything else, but the cash burn there must have been in that period when you literally have to shut down. I'm sure the investors were thinking, crikey, that was, from their point of view, not the best timing. From yours, excellent timing. Do you mind me asking, how quickly did you have to get on and talk about what will happen afterwards? Because clearly that just destroyed cash throughout that period. So we had a sort of core team just keeping selling and getting these sort of new projects teed up to run at the end. Cash burn was frightening, and the clinical team furloughed completely. We had no option really. There's nothing else we could have done with that. But we did. The projects that we do is not just a quick sell, they're over 2 years, so we're closing off some projects, starting new projects, and it was just all about just making sure the pipeline was ready to go as soon as we were allowed back into the offices. And really grateful for our investors for supporting us through that, which was tough times. So, Craig, coming back to you, I guess everybody's international on this panel, but you physically have stuff in the Netherlands separate. Just remind us of the timeline. How active was that, and how relevant was it? And did the pandemic upend everything for you?
So at that point, we were commissioning a pilot facility in Kinning Park. So food manufacturing was exempt, so that progressed. There were challenges clearly to install new equipment and to get it operational, but we didn't furlough anyone, and most people were physically in the pilot plant. The facility in the Netherlands wasn't built. We were doing kind of design work on that, so we went to do things that historically you would have said you had to do face to face. We were doing that remotely, but it was actually, it allowed us to focus on our operational activities in Glasgow. That was at the period where we had our first kind of Series B. So one of the challenges was, as well as not the face-to-face contact, one of our, our food is glorious, yeah, it's nutritious, we've got a wonderful chef. So some of that presentation of the food, and this applied to customers as well as of investors, we just physically couldn't do it. So that slowed down probably the investment, cycle. But from an operational perspective, because of our status as a food manufacturer, it didn't really have, that much impact apart from the normal kind of, normal challenges and COVID, procedures and protocols that we had to have.
So, in our final few minutes, we've collectively been through a pandemic. You've given us great insights into what it meant for you, as well as the broader journeys that your very different businesses with very different investor pathways have experienced. Let me ask, let's look in the crystal ball and look forward. You've already said, Gordon, that you're at the point where you'll have conversations about what the next stage of the journey is. But just share with us the ambition for the business. Ignore the investors for a moment. Where do you want to be in 5 and 10 years' time? And does that influence your choice of investor and backer for the next bit of the journey?
Yes, it would do. So if we're at 100 million turnover today, in the next 5 years, we can see a clear path to 500 million. We're in a 10 billion pound sector, so there's ample room for us to grow within that. But really beyond that, what that means for us is to build out our pan-European presence. So we have 21 offices largely across Europe, but there's some strategic opportunity there from a geographical perspective. And then we're looking broader, so a global horizon, looking east and west. And as we look to the investor that can support us on that next stage of our journey, matching that global ambition, I think, would be at the forefront of our mind.
Carol, I'm going to quote back at you something you said at the beginning. You said it had been easy to raise the money. Do you anticipate it continuing to be easy, or are your ambitions so global that there may be some more challenging conversations to come?
So global ambitions, I mean, we've only just recently had our first UK client. We've worked across the globe, but for some strange reason never had any customers in the UK, so we're a bit unusual. We don't have to be in a different location to do what we do. Certainly we have got ambitions to scale up the business. The clinical trials side of the company is really booming at the moment. We're definitely looking at more space for that. But we, as I said before, we've got this really interesting business model where we have the licenses with the royalties and milestone payments. Some of those should come to market within the next year or so. So that will just be a massive pivot for us when it comes to revenues, because it's money that's coming in that we're not actually having, I daren't say not having to work for, but I don't have to, have the staff to do that. So I'm hoping that if we do need more investment, it will be for perhaps maybe opening up in the US. Some of the US clients like the FDA approved services, but I'm hoping that now we've got enough backing and enough with the investment into the licensing side of the company to actually keep going ourselves. Fingers crossed. Maybe famous last words. I'll be back next year saying it's different.
Craig, you're physically present in Scotland, the Netherlands, you sell wherever, and clearly the mission-driven nature of your business is very much of the zeitgeist, and there must be a lot of potential. But where do you hope to be, and who do you expect to be alongside you as you go on that journey?
So our strategy is quite clear to expand our facilities in Europe, but also then to look in North America and in Asia. We've been largely pre-revenue until now. Now we're selling. We were B2B. We're now selling. So that opens up other options in terms of debt funding and some other models rather than equity funding. One of the interesting aspects is how would we operate the facilities? So when we started the journey 10 years ago, we never thought we would raise enough money to own and operate our own facility. The model at that time was very much a joint venture with another operating company, and we just never really were able to make that work because of decision making with the other party. So we pivoted to raising more money and owning, operating ourselves. When we look in the States, for example, we could own, operate. We could have a JV. We could have a license model. So you've got you know, these strategic aspects, you know, also as we look, you know, potentially towards exit, you know, these choices and how they impact. And we've got the practicality of being located in, you know, beside a biorefinery.
Thank you very much, particularly because you brought us in right on 4 o'clock. There is no fine. We are delivered. Ladies and gentlemen, I think we've had an absolutely fascinating set of insights from, as I keep saying, 3 very different businesses, 3 different investor pathways, and 3 different views of the future, but all chock full of ambition. Please thank our panelists.